welcome back. You're watching Power Breakfast on CNBC-TV18. Well, let's move on to the big story. Cash-strapped DHFL stakeholders held a meeting to discuss the resolution plan for the mortgage lender. CNBC-TV18 learns that banks have granted DHFL additional time to present its proposal to lenders. Ritu Singh joins in with more details. Ritu, over to you.
The key stakeholders of DHFL, including the core group of lenders, its bondholders, that is mutual funds and provident funds that have exposure to DHFL, SBI Caps, which is acting as the advisor to lenders, as well as the promoter Kapil Wadhawan, held a meeting to discuss the resolution roadmap for the company, which, remember, has total borrowings of over 1 lakh crore rupees. Now, we understand that banks have allowed DHFL 7 working days' time to present its resolution proposal to them, and they have also asked the DHFL promoters to pledge their shares as collateral if banks do agree to give them any fresh loans and sign an NDU or a non-disposal undertaking in favor of the lenders until this resolution plan is executed. Now, in the stakeholders meeting, the broad contours of the draft resolution proposal were discussed, including restructuring of loans with longer repayment terms, partial debt conversion and additional support by way of a new line of credit. Now, we understand that these mutual funds and pension funds have sought an assurance from the bankers that the final resolution plan would be collaborative and not lead to losses for them. Now, banks, we understand, on their behalf have assured them that the resolution plan would be comprehensive and will maximize value for all the stakeholders that are involved. Now, do remember, DHFL, we had reported, is understood to be in talks with various private equity players, including Aeon Capital, Cerberus Capital, as well as Oaktree, for a potential stake sale deal, which could fetch DHFL upwards of 7,000 crore rupees.
All right, Ritu, thanks a lot for joining us. We will keep coming back to you for more updates. But now let's shift focus to the big number today. IT major Infosys delivers its Q1 numbers today. Rima is here to tell us what the street is expecting. Hi, Rima. Good morning.
Hi, good morning. Well, after TCS missed street expectations on the revenue front, all eyes will be on Infosys. If there is a miss on the top line, then it will confirm the industry fears of a possible industry slowdown. So here's what we're working with. A dollar revenue growth of 2.4%. This would compare with TCS's number of 1.6%. In constant currency terms, Infosys is likely to deliver 2.8%. Again, higher than what TCS had reported. But remember, this number also includes about a 40 to 50 basis points contribution on the back of that Stata acquisition, which was ABN AMRO's mortgage business in Europe. Margins are expected to hit another record low for a second consecutive quarter, this time closer to the 20% mark on the back of wage hikes, H-1B visa costs, the INR appreciation, as well as localization. The question is how much of that can be offset by higher utilization as well as productivity benefits. On the big FY20 guidance, well, it is likely to be maintained. Typically in Q1, very few companies go ahead and change it since they'll wait for at least Q2 or Q3 to assess the change. So constant currency revenue growth of 7.5% to 9.5% to be maintained, and the margin guidance band of 21 to 23% is likely to be maintained despite the company's Q1 margins coming in below this margin band. Well, the key to track will be BFSI. Of course, this quarter's numbers will look good because of that Stata acquisition or ABN AMRO's acquisition, but you have to look at it on an organic basis. Not just that, the company had also called out weakness in the prior conference call in a few regional banks in US and some parts of insurance, manufacturing and autos in Europe, healthcare and life sciences. Is this weakness getting more pronounced in the coming quarters? And of course, then other factors like digital attrition will be tracked more closely. But I guess what the street wants to know is there some macro uncertainty? Is it resulting in the growth slowing down for the IT companies? I think that commentary will be critical because it impacts not just the Q2 numbers, but FY20 as well as FY21 estimates. Back to you.
Absolutely, Rima. As you rightly pointed out, if it is a macro problem, that is something that we'll be watching out for, because TCS had alluded to the fact that the BFSI slowdown was more than what they had expected. So let's stick to BFSI and let's talk about IndusInd Bank that will be coming out with its numbers today. Abhishek, what can we expect?
Well, the bank for the first time will be reporting its numbers along with the merged entity of Bharat Financial, and going into the results over the last few weeks, from its low of 1380, it has already moved to 1540. So that's an up move of almost 12%. Loan growth is expected to be north of 30% plus, given the fact that, Bharat Financial has been growing above 35%, while IndusInd's own book is growing north of 25%. The net interest margin is expected to improve given the fact that Bharat Financial's profile profile is a net interest margin of 10% plus, while IndusInd Bank in the previous quarter recorded a net interest margin of 3.6%, which is the lowest in last 15 quarters. Their stress asset portfolio, which they mentioned at 1.9% in the previous quarter, that will come down given two factors. One, a small bit of recovery that the management has mentioned to few analysts, and also given the fact that there is a denominator effect on account of the loan growth. So asset quality is expected to improve. Gross NPA was at 2.1%, and we can see a bit of recovery or write back in this particular quarter. So for the merged entity, we expect an NIF close to 3,000 crore, while net profit can be at 1,280 crores. Back to you.
All right, Abhishek, thanks a lot for that. And yes, the numbers are expected during market hours, so stay tuned to CNBC TV18. But now it's time for a break. Up next, CPI data for the month of June and IIP data for the month of May will be released later this evening. Key expectations when we return.